Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me in the podcast, it is the smartest guy in the room, Mr. Michael Becker. Michael, how are you?
Hey, Paul, doing good. How are you?
I'm doing all right on this warm and blustery day here in Texas. And rather be in Texas today than the hottest place in the country, I think, is Los Angeles, California, at 115 degrees. Yeah, so they always talk about how hot Texas is, but I think we're a little cooler than 115 degrees these days.
At least we keep our power on in the state of Texas. We won't have the rolling blackouts like we do in California, so we got that going for us too.
That's good. Michael, as you know, is owner of multifamily properties in the state of Texas, owns 6,000 doors. So we really have some great conversations with Michael, and he brings in some great guests that we can chat with. And so to kind of kick this thing off kind of on the right path is I want to talk a little bit about the possible demise of the 1031 exchange. And I think that's very important to kind of talk about. So, it's something that I've gotten questions on in the last, say, month or 2 months or 3, that people are trying to figure out exactly what direction this thing is going. And I really don't know where the heck that's coming from, except it's an election year. And people are just starting to throw out that we may see different forms of fundraising to bring more money back to the country. And one of the things that they always talk about is maybe capital gains, higher tax on that, but also exchanges possibly going away. So you could have immediate gains in that and make that a taxable event. So in the podcast today, we have Craig Brown. Craig's an attorney based here in Dallas. He is part of the 1031 exchange company. And he's brought his general counsel in, Suzanne Baker, and she is also with a 1031 exchange company. And I'm going to let those guys kind of talk a little bit about what they do. Suzanne is kind of the tip of the spear on 1031 exchanges, because what we don't want to have is just some talking heads talking a little bit about some general ideas and concepts. But both Craig and Suzanne are attorneys, and they are just very knowledgeable about what's going on. So, Craig, I'm going to kind of introduce you. And then, do me a favor, introduce yourself. And
all right.
Suzanne, I'm going to turn that over to you, and let's kind of talk a little bit about exchanges. So, Craig, tell us a little bit about you.
Okay, certainly. Craig Brown, and as Paul said, I am an attorney with Investment Property Exchange. We do about 20,000 exchanges a year. That's the late exchanges, sell first, then buy. We also do a fair number of more complex exchanges, reverse exchanges, improvement exchanges. But the real reason that I throw those numbers out is really as a description of the breadth of the market that we have. These are nationwide deals that happen all over the country. We've been doing this for a long time. This is my 23rd year in the business of doing just 1031 exchanges. We're a pure play 1031 qualified intermediary. We are owned by a Fortune 500 that controls about a third of the title business, Fidelity National Financial, through various brands. So not only do we have our direct expertise in 1031 exchanges, but we also gather information from our title operations and what they see on a state basis and a national basis. And then the real star of this show today is Suzanne Baker. Paul said it perfectly. She is the tip of the spear. Suzanne has led the defense of 1031 exchanges for the past 6 or 7 years when they've come under attack legislatively in federal government, whether it be members of the House Ways and Means, Senate Finance Committee, presidential candidates. It doesn't matter where that potential attack has come from. She's been the one that's been able to articulate and help move the industry to be able to explain to the members, who I will say have been extremely receptive to our input about 1031 exchanges. So I think one of the things that we can do is we can lay just a little bit of groundwork, maybe about some of the attacks that have come, and then maybe talk just a little bit about what is the same and how those things that are in fundamental terms the same, but maybe how they've been tweaked just a little bit in these current attacks. If that's good, I think we can jump on and do that. So, exchanges have been called many different things, but they've been around since 1921. So almost the inception of the tax code has there been this concept of the deferral of gain recognition. Now, it used to just be a swap. Two parties would swap deeds on a property, and then it went through some changes. And then there's a seminal case called the Starker case, which is really the kind of the genesis of the modern exchange. So some of you may have heard of this referred to as the Starker exchange or a Starker trust. That really just tells us about one type of exchange, a delayed exchange, sell first and buy. But 1031s have been referred to as a loophole, abusive tax shelters, preferential treatment for the real estate industry, which is just a way to talk about class attack, an attack on the wealthy. There have been calls to completely eliminate 1031. There have been calls to limit 1031. But these all date back quite a few years. And so there's nothing that we're seeing that's really all that new. But since the inception of exchange, there has been, from the administration side, the practical application of 1031 exchanges to real estate investors and taxpayers in general. There's been a progression towards the acceptance and the use and the expansion of 1031 exchange. It's really only been as some of the tax wonks, if you will, the bean counters that are not facing the investor industry like the members of the House and Senate are, that postulate these ideas of being able to eliminate 1031. Now, we'll see that there's a couple of ideas that, to limit, and some that, while not completely eliminating 1031, might in effect have the same impact as eliminating 1031, even though it really looks like a limitation.
How much of the transactions, kind of investment sales transactions on commercial real estate are 1031s? Do you have a sense of kind of the percentage?
Sure. Suzanne, do you want to speak to some of the studies that we have on some of those? Because I know you've had some specific numbers, especially out of California. So,
I don't have a good answer to what percentage of commercial real estate is like-kind exchange. It varies dramatically from region to region. In California, 1031 is just a household word. You could probably stand on any street corner and ask somebody, what's 1031, and they could explain it to you. You go to other parts of the country, they're used, but they're not as common. And so that kind of distorts the overall national numbers. They're highest on the West Coast. There were a couple of economic impact studies done back in 2015. There was a macroeconomic study by Ernst & Young on the economic impact of either eliminating or limiting 1031. And that covered everything. It was real estate plus personal property, because personal property could be exchanged prior to the Tax Cuts and Jobs Act. Then also in 2015, there was a microeconomic impact study focused on commercial real estate by Professors Ling and Petrova that looked very specifically. Now, what's really interesting is two things are really interesting. The findings in both of these studies dovetailed very complementary. The other thing that's interesting is both of these studies are in process for being updated to give us some kind of new statistics and a broader body of data from which to examine. Anecdotally, we know that commercial realtors on the West Coast will say 45% of their deals are 1031 exchanges. Nationally, National Association of Realtors just did a survey, and I think they came up and said 70% of their realtors had been engaged in a 1031 in the last couple of years. And certainly while we see lots of action in commercial real estate, multifamily, which I know is a segment of commercial real estate, but also even single family rentals are also the bread and butter of 1031s. And that's where you get your moms and pops that have a single rental unit or a 2-flat or a duplex or something like that. And then they'll do an exchange to ramp up to, a 4-flat, a 6-flat. and, build some wealth, just as small businesses can ramp up to, facilities that are going to meet their needs for tomorrow instead of being tax locked into yesterday's inefficiencies. So to kind of come back to the old saw about, it's an abusive loophole just for the wealthy and large corporation, that couldn't be farther from the truth. It's really one of the most fair sections of the tax code because it is used and benefits such a broad spectrum of taxpayers, ranging from, middle-class individuals to small business, mid-sized business, as well as large corporates and high net worth. And ultimately, everyone benefits, even when, they talk about, large projects owned by REITs or institutional holders. Those ultimately come back to people like you and me who have REIT stocks in our 401k plans. So if that REIT manages its portfolio more efficiently, well, that helps me in my retirement funds that are designed to keep me from ever having to live under a bridge.
Yep, that's certainly true. Michael, tell me a little bit about you personally. What type of impact would that have?
I got to imagine that's probably half of our, maybe not half, but 40% of our business is some form of a 1031. Whether it's one that we do with our own money or whether we kind of help some high net worth individuals, typically from California, that are selling a building that want to come to Texas. So, I would assume, Suzanne and Craig, there's probably 20% of the volume of multifamily deals in Texas, if I just had to swag it just from my perspective. And that has this, downward negative impact if that goes away from all the banks that make loans and title companies that close the transactions, all the various vendors that then would go renovate a lot of these apartments that trade. There's just a big ripple effect that kind of goes down to the vendors that would do the work on that. Just all that would just kind of seize up dramatically, really. So I think it would have, quite a negative impact on a lot of the service providers along the way. And ultimately, I think it probably makes prices go up if there's less deals available to trade. I guess that would be a question, that might be a little counterintuitive, but if there's less 1031 money out there, people aren't selling these deals, so they hoard the properties. There's less properties available to actually sell. So I would assume that we would anticipate pricing actually goes up if that actually does get repealed.
You are absolutely correct on that. You are 100% on the money. And that is what both of these economic impact studies showed, is that the cost of capital rises, the rate of investment slows, holding periods expand, prices are going to go up, and then you have stagnation because you have a lot of deals that aren't going to happen. And so, owners maintain, buyers renovate, they rejuvenate, they refurbish, and they improve those neighborhoods. They improve the tax base. And so both of those found that. And the Ernst & Young study measured the impact on the ancillary and the tertiary levels of economic activity, which is exactly what you're talking about, Michael, that instead of just looking at the taxpayer doing the exchange, look at all the jobs that are created because of that exchange that you rattled off: the appraisers, surveyors, the lenders, the tradesmen, the contractors, the building materials suppliers. And the larger the project, the more jobs there are. On a small project, you still have a bunch of jobs, but on a big project, you have a huge number of jobs. And then you have this tertiary effect of the businesses that exist and generate taxable revenue on the disposable income from gainful employed workers. The movie theaters, the restaurants, the bars, the vacations, the tourism industry, all of that sort of thing. So yes, Michael, you are right on the money with that.
Where are we getting all the feedback on these deals that the exchange is going to go away? We've heard that a long time ago, then it went away. The Jobs Act did a couple changes to it, but what really, is it the election that we're seeing it, or is it time? Is it just time in the cycle that people just want to see it go away? So tell me a little bit of where we're hearing all this noise.
Sure. The Tax Cut and Jobs Act was the last major attack, and 1031 just generally was pretty much slated to go away. And we were able to prove, and these two studies, the Ling and Petrova study and the Ernst & Young study, were very beneficial in being able to show the economic reasons, just as we have discussed, as to why 1031 for real estate transactions should continue. Now, 1031 exchanges for personal property, aircraft, heavy equipment, those types of things went away. Those did impact real estate in some regards because of all the, the FF&E that you have and like our fast food restaurants and those types of things. Some of those that are so integrated into real estate transactions with personal property, that did have an impact. But really it was Tax Cuts and Jobs Act was the last big attack until now. We are seeing it again now because of this election cycle. But the underlying theme of 1031 being a revenue raiser, a place where you can go get money to pay for other things that you want to do, that has never stopped. And we have never stopped. And so we'll let Suzanne kind of speak to where a couple of the direct attacks are sourced from and how we are reacting to those now, because we've not stopped since before 2017. We have not stopped our efforts in educating members of House Ways and Means and Senate Finance.
Right. So this is a marathon that feels like a sprint. We're exhausted, but, we've been at this since really 2014, when then Chairman of Ways and Means, Dave Camp, came out with a discussion draft on a tax reform bill that repealed a lot of stuff, including 1031. There have been other things. One of the things we've learned is that bad ideas in Washington, D.C. do not go away. They probably don't go away anywhere. They just get put on a shelf. And then a couple of years later, somebody says, we need to come up with some money to pay for something. Well, I don't know what this is, so let's just get rid of it. Or I heard something bad, so let's just get rid of it. And it pulls down again. And so I like to say it really does not matter who's holding the gun. The gun is pointed at us. So, that's the issue, is you're looking down the business, end of a gun. And we had a fight for our survival under the Republican administration with Kevin Brady, who was then chairman of Ways and Means, who said, hey, with full expensing of everything, including structures, you're not going to need 1031. And so we convinced him and the other members that 1031 was just so vitally important, and that expensing of real estate buildings was not a good idea. I mean, the real estate industry writ large came out in favor of 1031 and against expensing. And so we won that battle. We lived to die another day. So now in the Biden campaign platform, they're looking for a revenue raiser to pay for some of their agenda. And so once again, 1031 gets pulled off the shelf to pay for some of that. And regardless of who wins this election, the reality is we have been shooting money out of a cannon for the last couple of years here, and our deficit is gigantic. And at some point, taxes are going to have to go up to pay for stuff. Doesn't matter which stuff. The point is, there's a lot of stuff to pay for. I mean, just look at all of the pandemic-related relief, which, nobody could say is a bad idea. But the point is, it all costs money, and at some point, we're going to have to pay that piper. And so they're always looking for something that can generate revenue. What we have shown with these economic impact studies, and expect to show again by updating them, is all of the economic activity that is stimulated within the United States by 1031. That 1031 removes friction from transactions. It provides an incentive for owners to transition properties to buyers who will improve them. And certainly, as we look at what has happened during the pandemic, business models are changing. The hotels, the hotel industries, offices, retail, there's a lot of those properties, a substantial number of those properties are going to have to be repurposed or remodeled to meet the post-pandemic business models. Even I have to think, Michael, even with multifamily, anything that's residential, what's the one thing everybody needs today? A home office, because so many people are working remotely. So there are going to be lots of owners that are not going to want to or not going to be able to put the capital in to make those changes. But if we have an incentive for them to trade out of those properties and give them to the buyer, transfer them to the buyers who will infuse the capital and make those changes, and then let those owners go reinvest into something else that is, more useful for them, we all benefit. The economy benefits. And all that repurposing, that's a lot of jobs. So that's really our big message in Washington and to members of Congress is, 1031 is fair. The tax does get paid. It's simply a timing difference, just like depreciation is a timing difference. And at the end of the day, it generates a lot of jobs and a lot of local and state level revenue.
And I think Paul and Michael, one of the things that we're definitely aware of is that when we're able to have the opportunity to sit with a member and explain what 1031 really does from a top level anecdotal perspective, they understand. So in a conversation like we're having right now, they understand that, but they need more depth. And while we can't possibly explore everything that's in these studies, I would suggest that those are good reads. It's worth the time to read these two studies and understand how well analyzed and how well thought out the message is of what Suzanne has just been describing. There is not an economic case that can be made against 1031 exchanges from the overall health of the economy. We have to be sure that we prevail on the political argument. And like Suzanne said, the attack has come from both sides. So we're not slamming, either one of the two sides. We're agnostic from that standpoint of we think 1031 is good regardless of who has control and who is in power. We can make the economic case for 1031 exchanges. So I think it's real important to understand that we do have the data to back it up, what we're telling the members. And that is one thing that came out in 2017, 2018 was they said every time they asked us for something, every time we came to them and said, we don't think you're looking at this right, we would like to educate you on this more. And they said, okay, prove it. We were able to prove it. We were able to bring them the information that we told them anecdotally in a conversation that we had. We were able to back it up with facts. And one of the things that I think is super important is they do listen to their constituents. And we can't explain to you enough how your members and the people that look to you for, this podcast and advice, it really does matter if they get active and let their representatives know how impactful 1031 is in the marketplace. So those that have utilized 1031s, they need to make that known. They need to provide a study. I was able to sell these 2 fourplexes and buy this, 20-unit apartment complex. And those little stories, those stories about everyday investors are extremely important to the members. One of the things that the questions that we're asked most often, and Suzanne can speak to this as well, is there's a perception that every 1031 investor in the world, U.S., takes their gain to the grave, right? That this is purely a play to exchange, die, and the heirs get a step up in basis, and that capital gain tax never gets paid. Okay. Now, certainly that does occur. That is something that happens. But the number one question that I received, and when I would sit down with members or I would sit down with their staff in our visits to DC, that was the number one question. Well, does everybody take this, does ultimately this gain ever get paid, or do they just die and this gain never gets paid? And so our studies show that on the commercial transactions, that in fact, typically after one cycle, the vast majority of those transactions will have a gain recognition event, whether it be a total gain recognition event, whether it be a partial gain recognition event, there will be gain recognition. And so it's not a completely just take the gain to the grave. And I don't know, Suzanne, you've done more recent. Suzanne's been very active in. We've been doing some webinars, and because we can't do face-to-face meeting with members, we've had the opportunity to meet with some in webinars. 1031 issue settings, and Suzanne has participated in those. So she may have some more insight into some of the later questions than I have. So.
Well, that's a common question. It's just one of those things that kind of never goes away. And we continue to explain it. And sometimes I feel like the minister of perspective. I have to point out, what? Corporations don't die. Partnerships don't die. Business entities don't die. And I can tell you as a former salesperson, when you tell people, well, the way to really make money is to die, that's a really hard sell. So the reality is the overwhelming majority, is the Ling Petrova study showed, the overwhelming majority, something like 88% of replacement properties that are acquired in a 1031 exchange are actually disposed of in a taxable sale. The people that are one and done, doing a 1031 exchange makes sense today. It may not make sense 7 years from now. If it's a corporate entity, they may have a bunch of NOLs, so they can go ahead and recognize the gain. They don't need a tax deferral. Same thing for individuals, or they may be wanting to get out. And what we like to point out is step up in basis is not about 1031. It's about inheritance law. So you have a step up in basis regardless of whether you're talking about real estate or stocks and bonds, or, artwork. And so if you have an issue with wealth transfer without any gain recognition, well, that's a separate issue. Go attack the estate laws. But for 1031, it's not unique, and it's not really a sizable portion. And if you look at the small portion that is not disposed of in a taxable sale, well, okay, there's a myriad of potential transfers that are not necessarily taxable sales. It could be a subsequent exchange, could be death, could be a divorce, could be a partnership distribution, could be partition, could be foreclosure, could be condemnation. There's a whole lot of different types of transactions that can go into that bucket. So at the end of the day, the overwhelming majority of like-kind exchanges are nothing but a tax deferral vehicle, a timing vehicle, and the tax does get paid, just like depreciation and depreciation recapture.
Michael, I look at individual operators like you and some of the things that Suzanne is talking about. I mean, that has a direct impact on how your business or how a lot of operators' business are going to compete in the future. What's some of your thoughts?
Yeah, no, I think she's right. Certainly if it goes away, I think a large percentage of the volume of the transactions go away, and really, I think that ultimately hurts. Pricing goes up, and less velocity. I think like she made a really good point that buyers renovate properties, owners tend to kind of just maintain status quo, because once you own the deal, you capitalize it, and your basis is here, and price has gone up. You're kind of more worried about current cash flow and more so than trying to eke every dollar of the value add out of it. So I think you tend to have an aging apartment stock in our particular case that is less quality for the residents out in the marketplace. So I think it's certainly been a big fabric the entire time I've been doing business, and I think you take it away, it's going to have tremendous amount of ripple effects and ultimately cost revenue to the governments. I mean, the other thing in Texas, a lot of the property tax, a lot of the revenue for the state is from property taxes, and those assessments get reassessed, typically kind of get reassessed upwards upon a recorded of a deed of sale. And then in other states like New York or California, they have like a stamp transfer tax where they, get a percent, maybe like 1% of the sales price as a transfer tax. And then like New York City, I think that's a pretty large percentage of the revenue base. So they're going to maybe try to raise revenue by taking that away and then cause holes in other revenue sources. So I think it's ultimately going to be a little short-sighted if they go away with it, Paul.
Well, I mean, Suzanne, how serious are they about making these changes? What's some of your ear to the ground? I mean, again, we don't know where the election's going to or what's going to happen after November the 3rd, but how serious are they about actually making changes?
Well, first of all, I'm very optimistic. We really had a fight for our survival before the Jobs Cuts and Tax Act. The blueprint, really had us gone. And we took our story and then, we took our story to the Republicans as well as to the Democrats. Now we're taking our story to the Democrats as well as the Republicans. You talk first to the folks in power, but you don't forget about the people that are not in power. And what we find is they listen and they get it. And once we show them the numbers, as Craig said, and we demonstrate all this, they believe and they recognize how important it is. And we'll go to different members of Congress and say, look, this is what's happening in your community. Nobody's talking to us about it. So we've done some things within the industry, and Investment Property Exchange Services, our company, is the largest qualified intermediary in the country, but we're not the only one. And we're active in our trade association, the Federation of Exchange Accommodators. And what we've done is we've gone to 4, 5, 6 of the larger qualified intermediaries or those that have a particularly large market share in an area. And we'll say, hey, let's combine our data, all of our relinquished and replacement property data. Let's figure out just how many transactions, just a handful of us have facilitated in this congressional district or in this state. And so we've been doing that just collaboratively with our competitors and our colleagues in the industry, and then presenting that data to these congresspersons. And boy, that's an eye opener. And in fact, we had a Zoom meeting the other day with a congressperson from Pennsylvania, and just a handful of us pulled together our data, and we said, look, just 5 of us or something, or 6 of us in the last 2 years have done $3 billion worth of exchange transactions in your state. And based on the recording fees and transfer taxes that are in effect in Philadelphia County, it was over $130 million of local revenue. And that doesn't even take into account the property taxes. That's just fees. And it also doesn't take into account permitting fees and inspection fees when you're doing, renovations. So, we're really trying to look at some of those things, and we really try to come to them with information that gets their attention, that's relevant to them. And so we have found, there's bipartisan support for 1031. There's bipartisan understanding. It is not at all a partisan issue. The pay for may be partisan today on one side or the other, but at the end of the day, the vehicle enjoys a lot of support no matter, where you're at on the spectrum.
So you're taking the message to the street, so that's great. So
you betcha.
With the last few minutes here, Craig, we'll kind of put a bow on this and, prognosticate a little bit about what you think and where this is going to go to.
Sure. The insight that Suzanne is able to provide to us is invaluable. And as she stated, the collaborative studies. So do that with, your book of business, your clients. Tell the story about how 1031 impacts. I, too, am very positive about 1031 exchanges. That's why I think it's so important that we actually get to the actual members, because some of the people that are in the background that are calculating things and saying, well, we can use this as a pay for, those people are not accessible to us. We can't reach to them to talk to them and educate them about, what 1031 does. They don't necessarily take the time to read the study because they're promoting their position of saying, well, we think this is a way to pay for it. And if their idea gets used, then it's great for them. So we need to actually go to the members to say your constituents use this structure and have used this structure for years and years and years. One of the things about tax policy is, as strange as this may sound, they really do consider the administrative burden of tax policy. They don't want to create things that are overly burdensome to administer. And this has such a long track record, like we said, back to 1921, and really the Starker case in 1979 with our modern exchange and the specific rules we work under since 1991. There is a long history of how 1031 has worked its way into the fabric of real estate transactions. So I'm positive. I still think we have a political message, like Suzanne said. It doesn't matter what side is in control. The pay-fors are pay-fors. And so we have to be vigilant in that. That's why we haven't stopped.
If somebody wanted to get copies of those academic reports that you guys talked about, what's the best way for them to get a copy of those reports?
We can send you links to those reports so that you can post those. And Suzanne, I think that is the correct way for us to give access to those reports, is through those links.
Sure. We have summaries on our website, www.ipx1031.com. There are also some summaries on the FEA has a tax reform website, 1031taxreform.com. But if you go to ours, ipx1031.com, we've got summaries of those studies, and we've also got a way that you can contact your congressperson and let them know how important 1031 is to you and your business and your clients.
Yeah, we'll provide you with all those links. That was in some of the information that we already sent over, but we'll make sure those links are easy for you to get to.
Sounds good. Michael, any other questions for Suzanne and Craig?
No, I appreciate you guys coming on. Hopefully we can fight this off again, because I know it's pretty beneficial. Everyone that probably listens to this podcast is certainly a big part of the transaction volume here in Texas multifamily, for sure.
No, I think it's a huge thing. Like Michael, I would almost say is a great example, because he started his life buying 14 single family homes, and then pushed that over to buying 5,000 or 6,000 apartment units. So the exchange is a very big part of everybody that is in real estate, whether you're in commercial real estate or you're in residential real estate, that you have a single family or a fourplex or a duplex that you've rented out. I mean, it is a fabric of the United States for 100 years. So to try to take that away or modify that is going to have a different impact on different levels throughout the country in the way it's possibly going to be done in the future. So, Craig, thanks for being on. Suzanne, certainly do appreciate you spend some time with us. Again, Suzanne's the tip of the spear. But again, if there's any other questions, we'll put you in contact with these folks, and then you can kind of talk a little bit about it. But we appreciate you guys being on and explain a little bit more about the rumor of my demise.
Right.
If that works in the 1031 exchange. So we certainly do appreciate that.
I chuckle because we've used that phrase many times.
That's right. So again, I'm Paul Peebles. It was Michael Becker. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.